And he's going to make it someday because, see, this is in his head that he's going to be rich. And it's going to happen, but you got to be patient because you can't, as they say, you can't build something right away like that. It takes time, but he is going to be successful someday because he has that motivation. One thing I can say about my grandson Michael, he is going to be successful because he has that goal that what he want to be. And he's going to make it someday because, see, this is in his head that he's going to be rich. And it's going to happen, but you got to be patient because you can't, as they say, you can't build something right away like that. It takes time, but he is going to be successful someday because he has that motivation. One thing I can say about my grandson Michael.
The foreign exchange, or Forex market, is the world's largest financial market, and it plays a vital role in the global economy. Every day, trillions of dollars are exchanged from one currency to another. This kind of currency exchange is essential for international business. Forex market participants include governments, businesses, and of course, investors. Governments use the Forex market to implement policies. For example, when conducting business with another country, whether it's borrowing money, lending money, or offering aid, a country needs to convert its currency into a foreign currency. Businesses use the Forex market to facilitate international trade. For example, they may need to convert payments for goods and services bought overseas or to exchange payments from international customers into their preferred currency. And investors use the Forex market to speculate on changes in currency prices. Currency prices change almost constantly during the week because the Forex market is open continuously from Sunday at 4 p.m. until Friday at 4 p.m. Central Time. A trading day starts at 4 p.m. and ends at 4 p.m. Central Time the following day. The market has to be open around the clock because of the global nature of the economy. Let's go over some basics of how trading Forex works. When you trade Forex, you're not just trading one product. You're trading two currencies against each other. This is known as a currency pair. The quote for a Forex currency pair defines the value of one currency relative to the other. The easiest way to understand any quote is to read the pair from left to right. Let's look at an example using the euro versus the US dollar currency pair. If the EUR-USD is trading at 1.20, that means 1 euro is equal to $1.20 US dollars. Here's another example using the US dollar versus the Canadian dollar currency pair. If the USD-CAD is trading at 1.25, that means 1 US dollar is equal to $1.25 Canadian dollars. Even though there are two currencies involved, the pair itself acts like a single entity, similar to a stock or commodity. And just like when trading stock, investors profit when they buy a currency pair, and its price increases. Investors can also profit if they sell or short a currency pair, and the price decreases. Let's look at an example. Suppose an investor thinks Europe's economy is going to grow faster than the United States, and as a result, she thinks the euro will strengthen against the US dollar. She can buy the euro versus US dollar pair to speculate on her assumption. If the price of the currency pair rises, she'll make money. Conversely, if the price falls, she'll experience a loss. Now that we've covered the basics, let's look at a few key aspects of the Forex market. We'll start with margin. When you trade on margin, you only need to put up a percentage of the total investment to enter into a position. This amount is known as the margin requirement. When you trade other securities like stocks, trading on margin means you're borrowing funds from your broker. However, Forex trades can only be covered using funds in the investor's Forex account. Investors can't borrow funds to enter a Forex trade. If they don't have funds in their Forex account, they need to transfer funds before placing a trade. Forex margin requirements vary depending on the currency pairs and the size of a trade. Currency pairs typically trade in specific quantities known as lots. The most common lot sizes are standard and mini. Standard lots represent 100,000 units, and mini lots represent 10,000 units. Depending on your brokerage firm, you may also be able to trade Forex in 1,000 unit increments, also known as micro lots. Margin requirements can be as small as 2% of a trade or as large as 20%. But the margin requirement for most currency pairs averages around 3 to 5%. To understand how margin is calculated, let's look at an example using the euro versus US dollar pair. Say this pair was trading at 1.20 and an investor wanted to buy a standard lot or 100,000 units. The total cost of the trade would be $120,000. That's a lot of capital. However, the investor doesn't have to pay that full amount. Instead, she pays the margin requirement. Let's say the margin requirement was 3%. 3% of $120,000 is $3,600. That's the amount the investor needs in her Forex account to place this trade. This brings us to another key element of the Forex market: leverage. Leverage enables investors to control a large investment with a relatively small amount of money. In this example, the investor is able to control $120,000 with $3,600. The leverage associated with currency pairs is one of the biggest benefits of the Forex market, but it's also one of the biggest risks. Leverage gives investors the potential to make large profits or large losses. One more important element in the Forex market is financing. This is the calculation of net interest owed or earned on currency pairs, and it happens when an investor holds a position past the close of the trading day. The US dollar is associated with an overnight lending rate set by the Fed, and this rate defines the cost of borrowing money. Similarly, each foreign currency has its own overnight lending rate. Remember, when you trade a currency pair, you're trading two currencies against each other. Even though the currency pair acts like a single entity, you're technically long one currency and short the other. In terms of financing, you're lending the currency that you're long and borrowing the currency you're short. This lending and borrowing occurs at the overnight lending rate of each respective currency. In general, an investor receives a credit if the currency he is long has a higher interest rate than the currency he is short. Conversely, an investor is debited if the currency he is long has a lower interest rate than the currency he is short. Let's look at an example. Suppose an investor has a position in the Australian dollar versus the US dollar currency pair. Say the overnight lending rate for the Australian dollar is 2% and the overnight lending rate for the US dollar is 1%. The investor is long the currency pair, which means he is long the AUD and short the USD. Since the AUD has a higher interest rate than the USD, the investor will receive a credit. However, if the investor was short the AUD-USD currency pair, he'd have to pay the debit because he's short the currency that has a higher interest rate. Financing is performed automatically by your brokerage firm. However, it's important to understand how it works and its financial impact on the trade. We've reviewed just a few elements of the Forex market. As with all investment opportunities, the Forex market has a unique set of risks and benefits, and education is the first step to determine if this is the right opportunity for you.
So, I'm gonna give you guys a chance to, win some money today. Not all $2,000, but I'm gonna give you guys a chance to win, maybe $100, maybe 200, maybe 300. If you guys are paying attention, I want to reward that. I want to show you guys that investing is where it's been at. I always say it's been the culture. So, look, I'm about to give you guys the blueprint before you. This is how much I care for people, and I really don't care about, getting people into the course, but I really do, but it's not beneficial to me, right? But it's just going to help you as the individual if you're taking this serious. Whoever's listening to me right now around the world, if if you're taking me serious and you're really trying to make money and really trying to find some hustle, it's gonna be more than a hustle. But long story short, this is where it's at. It's not as hard as you think it is, and I'm about to break it down. But before you even get the course, and listen to me, if I was really trying to break your pockets, I could charge thousands of dollars for this information, but I'd rather not do that. $60 per month will get you access to me and the digital and the virtual course and a lot of other things that we got rolling out. We're talking software and all that other stuff, right? So how we do it is this. Like I say, going back into us being picky, being bougie, 5 features that we look for, whatever. We don't trade until the market reach, either a high price or a low price. So that means that if the market doesn't return to the low price, right, or this high price up here, then I'm not going to position myself or place any trades, right? I might just analyze and keep, an eye out for it, but I'm not trading because it's not in my liking. If it's not in my liking and I force my hand, then it begins to get risky, right? So that goes back into some of you guys, thought process. You think it's risky, right? That goes back into it being risky. If I get in the middle, which is that now, then I'm in, I'm pretty much gambling my money. I'm at risk, right? Too much risk, right? It's not in my control at this point. And this is not where you want to place a trade, a buy or sell trade. That's what I'm talking about, right? The market only go up, market only go down. So it's only 2 things that can happen. At this point, the market is telling me I don't need to get in right now. I need to just go ahead and, sit on the sideline and chill until, I'm at a better location. They always say with real estate, location, 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 or time and timing or something like that. I feel like with the market is timing and location, right? Because if the market is not located at a great price for me, right? We're talking round numbers. We're talking, at a high or low price. If we're not there, then I don't want to facilitate no trades. And the reason why is, and I'm going to go ahead and move on, is because the institutions that we park our hard-earned money with, we're talking Citigroup, Barclays, J.P. Morgan Stanley, you name it, U.S. Bank, Bank of America. These are what they call liquidity providers. But they're also inside the market as well, placing trades, not as an individual, but on behalf of that institution. So that you're talking a $6 trillion per day market being able to be moved by these institutions. So if they're successful at it, why wouldn't I take that same template and do it as well? And that's exactly what we're doing. So let me show you. So we know that the gray box is a no trade zone, right? So what I'm going to do is I'm going to actually cross this out. I want you guys to understand this. I want you guys to get this. So watch this. I'm going to go ahead and black that out because that's not what we want to trade at. Boom, right? So what we do as investors, we sit back and we wait. And this is how we make our money. This is how the banks and the institutions make their money. They sit back and they wait until the price comes to a high price, right? Because look, I explained this before, and I explain more of this inside the course, the virtual course. Make sure you get it, like I said before. That's pretty much your Bible of how to do this. The whole unlock code, the whole key. So they come back up to a certain level. Why? Because the whole game is, liquidity, finding the money, locating it, taking it, and continuing that process, right? And they don't care, they don't have no emotions or nothing. They don't know it's just, right? Their job is not to make you money. Their job is to make them money. So if you can begin to model what they do, then you can ride the wave. And if you don't ride the wave and you try to come and reinvent the wheel, then you're going to lose money. Then you're going to say it's risky. Then you're going to say it don't work, right? So we wait until it come back to a high price. And they, like I said, they come up here and grab the money, because if there's money there, they're going to push the market to there in that location and take the money and maybe continue up or maybe continue down to the next money location, or what we call them liquidity pools, right? So market come up, boom, take the money off the table, and they may go down a little bit, come back up because they want to grab more liquidity as more orders are being placed, right? And then they take the market and go to the next destination, and now we're talking to the low price. Because remember, the whole game is where's the money. Ask yourself that when you're looking at a chart. It doesn't matter if it's Apple, Tesla, it don't matter what it is. Index currencies, it doesn't matter. Right? You say, hey, where is the money? If you're able to see where the money is and analyze, look at the chart, then you can kind of predict what, market's going to go and what they're going to do because you know the game, right? Come to a low price, see the dollar signs, they take the money off the table, and, they do the same type of, routine. They need to get in here maybe 2 times, right? They go up, they may need to get in 3 times to get 3 grabs at the liquidity, the money in that area, right? And once that money has been taken off the table, once again, boom, they take the market and they go the opposite direction. So that's the whole game. This is how we're able to make money. This is how you're going to be able to make money. This is the template. This is the secret. This is the sauce. I just gave it to you. Alright, so let's go ahead and jump into the live markets real quick. Like I said, we only look for a select few of things. If we do not see what we like, we do not trade. Alright, I want y'all to remember that. Like I say, it's just like you going out on a date or something like that. You do not, get into a relationship unless you really like what, the vibe is and all that good stuff, right? So, let's see. Alright, so. Wow. Alright, so. This is actually a nice little setup I got to share with everybody. Alright, so let's go out. Zoom out real quick. So, this is amazing because we've actually been talking about this setup on the Dow Jones Industrial Average. Now, this may be a little bit more complex for some of you guys, but give me 1 second, y'all. Give me 1 second. Alright. Alright, so like I said, this may be a little bit more advanced for most of y'all, but what I want to show you guys is what to pay attention to real quick. And like I said, I just want to give you much value and all the confidence you need to invest into yourself. Get the course because that's your blueprint on how to do everything from A to B all the way to Z, right? And I like to just kind of give you guys a sneak peek of what to expect and, kind of give you, like I say, some confidence and, kind of show you what's possible with these markets. And we just getting started. So right now, if I zoom back out, because I've seen something pretty nice. We had a nice M pattern, right? That's tradable. That's investable. We making words up over here. And that's the culture, man. We breaking chains and we changing the status quo. So this little setup right here, this is a tradable, investable. And I'm going to start saying that. Tradable, investable. I like that. Tradable, investable, trade setup or opportunity. Because look, remember what I just talked about. It's only a couple of things that we look for. So you can live your little life, how you been living it without, making a radical change. You just simply adding another stream of income, another hustle. And this is more than a hustle, like I said before. However, but you set the trades. And you're not always going to be able to, give me 1 second, y'all. I got to go grab baby Ava. You're not always going to be able to grab the trades at the very top. But you strive to, get them at a great location. Give me 1 second, y'all. Alright, y'all. We're back with baby Ava. She has woken. Say hi, Ava. Alright, so pretty much, like I say, this is a great setup, classic setup. And we always, try to get at the very top, but that's not always the case. So right here, we selling the market. I said it before, and I'll always say it. It's nothing hard about this. The market only go two ways, up and down. Sellers down, buyers up. That's it. When I see this M right here, guess where the market is going? It's going down. That means I'm selling the market. That's it. So I only got one thing I need to focus on until I get out of this trade and take my money. All right. So this is a great setup that hasn't happened yet. That's about to, maybe play out. And this is at a crucial level of the market. And like I said, only the 120 dreamers in the inner circle who got their, copy of the course and got access to what we got. We talking about the inside scoop, but they know exactly what's about to happen with this one. So let me screenshot this so I can go ahead and send it to these guys real quick, because we've been talking about this all week. And like I said, we had a crucial level within the market on this one. So I'm going to make sure I upload that. But pretty much, as you guys can see, this is what we are looking for. We're looking for a pattern. And that's what we got. So let's see what else we can find. Alright, so from yesterday's move on the NASDAQ, we know that the overall structure and the overall move was, the head and shoulders, right? But I'm looking at this little W pattern like situation happening over here. See if I can move this out the way real quick. So I know it's a lot of lines and whatnot, but let me show you guys. So I was looking at this little pattern here. Boom, we get the W up in there, right? Boom, right? They go up a little bit, but then they bring it down some more. And if this level holds up, then this could potentially be a whole different, W pattern or whatnot. And that's what we're looking for. Not only, but, that's our confirmation pretty much. So we got to sit back and wait and see if these levels hold up as support. And if they do, then we buy them up. All right, Ava, which one should we do next? Mamas. All right, so gold was looking pretty nice. Nice move on gold. Yeah, so this was a breakout, consolidate, breakout again, and then it consolidated and then retraced all the way back down to the Asian session or whatnot. So this could be a big old W pattern as well, but we have to see what happens. But guys, I hope you guys are getting value from this. Let's see what else. But yeah, gold, we can buy a commodity. We can invest into whatever. I want you guys to understand that you can invest into whatever it is. A commodity, whatever it is. You just look for those things that we just talked about slightly. And we're still using, just simple, things as far as trading. We don't do no fancy indicators and nothing like that. You don't need that. That's not how the institutions, trade or whatnot to be successful. If you guys believe it or not, I'm not saying that the indicators don't work, because I use some indicators, but that's not my primary focus. I take the raw price and I use it, and that's it, to, kind of see where the market want to go. Because like I say, with the market just by itself, the chart, the analyst, the data, it tells us where the money is and where it's not, right? And they're going to return to those levels. And baby Ava is over here holding me hostage. All right, so today is Thursday. We will be back on this thing tomorrow, Friday, doing all over again. And like I said, man, we're going to continue to do this thing. And we're going to be actually exploring some different time zones and trying some different setups far as the platform and the N.C.A.M session. But, If you guys enjoyed the N.C.A.M session, please like the video, share the video, and for my Facebook group members, make sure y'all add me personally, because like if you message me or whatever the case may be, I won't be able to see it. So if you guys got any questions, no matter where you're from watching this, feel free to reach out to me. Like I said, I'm here to help. I won't be doing this for no other reason, just to pay it forward. And like I said before, if you guys know the stock industry and investing, it's no team game in this, right? So that right there shows you that I'm doing this just to pay it forward. Like I said, I stepped away from doing those things years ago because I just didn't like having to depend on, hey Ava, I need you to join my my company, and it was just too much. I don't like to be dependent on nobody else to make me money. I want to be able to make money on my own efforts and what I know, and I don't have to talk to a soul. I don't, like I say, me doing this every single day, being on live, I don't even have to go on live and do this every single day. This is just strictly me being on a mission to change the world, and hope many people as possible monetize these dreams. But that's what it is. Like I say, this ain't required for you to recruit nobody. It's easy work. When I say this is the straight blueprint on how to work smart, and I'm not talking about breaking a sweat. You see me right now, I ain't breaking sweat. I ain't out of breath. I'm good. I'm working smart. You have the same smarts. You have the same ability. You got Wi-Fi, a smartphone, laptop, tablet, something. So all you got to do is stop being lazy and learn the information. Invest that $60 a month into yourself so you get access to some $1 million information, and I swear, it's going to change your world. But it ain't going to change your world unless you take that step forward. You might be one step away from what you're trying to do right now in your life, but you too scared to invest. I bet any kind of money, most of y'all in that situation right now. You one step away from accomplishing whatever it is you're trying to do, but you scared to do something, or you holding on to something. You can't hold on to whatever it is you holding on to, because how God gonna be able to bless you whatever you trying to get? He ain't gonna be able to bring it into your life until you let go what you trying to, what you holding on to. It might be money. It might be, you forgiving somebody else for doing something to you years ago. Forgive that person because you holding yourself back from blessings, money, all type of opportunities. And I'm only saying that to y'all because that's on my heart. And that happened to me before. Right? And that's what being a $1 trillion dream is all about, man. Having these principles, having these platforms like Forex and stocks and things of that nature to be able to invest and compound and make more money. True blessing. You talking working smart at its finest. And not only that, the money that we make and that is possible, you can make freaking, like I said, the institutions. If you see the money the institutions make, you probably think that, this whole thing is not a scam, but you would probably think that, like, how much the institutions make money and us working the jobs and making so little, you'd be like, hell no. You'll probably be mad as hell, like, all this time I could have been doing this and making the money they make. Yes. Right? And people don't know that, but that's why I'm here. I'm here to be that middleman. But not only be that, but to show you, be a living testimonial, transparently doing it, right? Hope y'all get what I'm saying. It's people, I'm not lying to y'all. I want y'all to understand this. My people, listen to me. It's people out here making millions of dollars without busting a sweat, without getting up and going to a 9 to 5. And we have the same information to show you how to do it. So some people don't believe it, but I like to show it. And once you begin to actually see it, it's going to change your world, like I said before. People make thousands of dollars within minutes. And when I say that, people be like, man, they click off the video or they go about because they ain't used to, it's foreign to them. They ain't used to hearing that. They don't believe it until we show them that it's possible. But that's A-okay, because only a few people are going to understand exactly what we're talking about. And if you don't understand, you just get some information, get the knowledge so you can understand it. and be able to position yourself, take advantage, and make money. But like I said, it's a $6 trillion per day market. I think enough been said right there. If you're able to get some of that pie per day, that's a lot of money, right? And I'm gonna say this, and I'll be gone. Markets always do the same thing over and over again, every single day. They create a high and low price, right? Why is that? That's what the institutions are doing. They have full control. They can control the market. High and low, boom. Right? That's it. So how can you take advantage of it? Get your little pips or points every single day and get out. You can be aggressive. You can make $1 million a day. And people think I'm lying about that, but it's not. I'm not. You got to change your mindset. If you can alter the way you think, you can alter your bank account. I'm telling you, I got slogans and catchphrases for days. I'm telling you. Listen, and it makes sense. Listen to me. First of all, all investing means is that you put money into something and it brings you back more money. It's like going to the casino or betting, but it's more secure and it's more consistent than that, or whatever. You invest $100. Show y'all this. You invest $100, right? And you get $2,000. So if you can duplicate that and continue to do that, doing this, then to me, like I say, investing is a no-brainer. It's been in the culture because this has been around for centuries. This is how the quote-unquote rich people stay rich and get rich. But yet, some of our people and whoever, they decide not to be advantageous, and when somebody's bringing an opportunity upon them, they pass it up. But like I say, just imagine that. Let's imagine you made $2,000 a day. Just imagine that, right? You made $2,000 a day, and that was your goal, and you was like kind of, you was stuck on $2,000 a day. Let's say that was your goal starting off. You make $2,000 a day consistently. The markets are open 5 days a week, 24/7. So you make $2,000 times 5. Let's do the math real quick. So I gotta put the money in because Ava's gonna get that. All right, so you do $2,000, right? Times 5. So you got $2,000 every day that you profited because you did the same thing over and over and over and over again, right? So you invested $2,000, or you profited $2,000 because that's your daily goal. You might want to go bigger once you get to know the truth of what we've been talking about. You might start making $10,000, $20,000 a day, and it's all possible. But let's just say $2,000 times 5. That's $10,000 a week that you're making, not busting a sweat, none of that. All right. You times that by 4 because it's 4 weeks within a month, right? That's $40,000 per month that you're now making. Because now you have a skill set that you can make money without having to go convince nobody, without having to go talk to nobody, without having to go break a sweat. Because you're no longer confused about money. Stop being scared to invest that money that you're squeezing and saving onto, because saving, it ain't beneficial to a certain extent. Alright? Y'all over here holding on to that money and it ain't compounded. It ain't working for you. Invest that $100 and make it work for you. That's what I'm trying to say. So that's what we're showing you how to do. And I'm about to go ahead and jump off this live video because your boy getting hungry. I'm going to go ahead and give me some Dunkin' Donuts. Ain't that right, Ava? Alright, so like I said before, make sure y'all get that course, man. Because like I said, I'm dropping jewels and all type of, knowledge and everything on y'all. So if you're getting value from this, you definitely going to get value from the course. And I pretty much want to, end this video with a nice little recap. So y'all enjoy this recap. Hey, when the market did what it did today, I was like, all right, cool. I know that the banks, the corporations, the institutions, if it's low and highs, just remember, it's going to be money parked there. And that's why I was talking about the liquidity, because at the high of the day and low of the day, you got money parked there. Because people are waiting for the market to come back down to those levels. When they go into the new day, right? they're going to go back up there. If I draw us across, they're going to go back up there and poke their head in there and take the liquidity out of that area. They're going to take that money, like I said before. So that positions you as an investor to say, all right, cool, I know that that's the previous high right there. So I want to position myself not to buy because that's what they want you to do. That's why we say sell high and buy low. You buy low down here. Previous high is your guide. Sell high. Instead of people buying, you sell high down here. So when it go down, you make more and more money. But we're doing what the institutions are doing because they high and low. As soon as the market's open, like I said, they shoot the price up impulsively. They make it so people, chase it. Shoot the market up, get people to think, oh, I'm missing out with the market. No, they just going to get the previous money off the table. They're cleaning off the table because that's their job. Their job is to clean off the table. Make sure nobody makes money. That's their job. Yeah, exactly. And if you can have the mindset of, cool, I want to make sure that I'm protected at all times when it comes to trading, and know that like they not going to look out for you. They going to make sure that you don't make no money. So when you're doing this, be in and out. You take out the previous high, and I always use an analogy with this. It's like the bees. They poking at it, poking at it, poking at it. When they satisfy, they gone. Mm-hmm. Same thing. They poking it just a little bit, and they go. And they take off. And once they do this, people that's buying the market, we're talking life savings. All type of stuff.
They're losing that money.
Exactly. Because they're on the opposite side and they don't know. Like what we know, And like I say, this is your guide because every day they're going to print out a high and low. And I literally do this to this day. Like, I'll look at the market, I see what they did yesterday, and I will not trade. So what I'm trying to say, I will not trade in the middle. This is why they say buy low, sell high. You sell high up here, right? And you buy low down here because this is what the institutions are doing. I want to do what they do. I want to do what the successful people do. So let's say the market is trading like this. That's a slap on the hand. You do not want to trade lines in the middle because that's their whole game plan. They want you to, I think the market's going to go up. So they'll mess around and create a pattern right here to make you think, we about to move. Exactly. But then you are educated because now you know the time of the day you should be trading. You know what you're looking for, and you know the whole game of, hey, sell high, buy low. This is what the banks are doing. So this is why I say the time zones are important. So today I got around 6. Some of y'all might get up a little earlier. I don't always get up at 6. But I only trade around a certain time of the day because everybody else is trading around that time. The banks and everything are trading around that time, so I don't want to be losing money. So if they trading in the middle in that offset time, I'll just wait. I'll just wait until London session come or New York session come because that's